Let me start with housing because anybody who's been watching Wall Street Beats for the last year and a half knows in the fall of 24 I started with an investment theme that said anything that needed to be financed would be disappointing, and I had talked about housing as one of those things that needed to be financed that would disappoint, and therefore I was shorting the home builders. And it's been a great short, quite honestly. Even when the market was making new highs, these home builders were going south. um, the importance of housing is on the upside, it can have a compounding positive effect on the economy if it can get stimulated. But on the downside, and this has been my focus, is it's going to have a negative wealth effect on consumption if home prices start to deflate. And I think that's where we're headed, is home prices are going to deflate by 15 to 25%. Now, there was hope at the beginning of this year that the Trump administration would come out with some new policies to support housing. He promised some sort of grand plan at the Davos World Economic Forum, and that didn't happen. That in his State of the Union address, he would unravel or unroll some new things, and that didn't happen. And the problem is Trump is very concerned that any policies he puts in place to stimulate new housing could hurt existing home values. And he
Hmm.
doesn't want that to happen because that would have a negative wealth effect. So he's between a rock and a hard place, and hasn't really rolled out anything new. In fact,
Charlie,
I think, yeah,
can I ask you a question?
sure,
Give me a
sure.
pause now and then, because I have a question for you.
Interrupt
And
anytime.
the 15-20% bear market in housing, do you that takes place over a year or two, I would assume, and does it affect the consumer's ability and willingness to continue consuming at current rates, or does it that in of itself risk a major recession?
It's my belief we'll be in a, let me caveat something. The answer to your question is yes. If we have a negative wealth effect from housing and equities, and I'm going to be writing about this and talking about this next week, so I don't want to, give away too much right now. But if we have a negative wealth effect, it will significantly curtail consumption and has the possibility, and I think probability, that we'll be in a recession by the fourth quarter of this year. So that's kind of the game plan I'm working with right now. But there are things, there are decision trees along the way. What happens to equity markets, and does the Trump administration find something, magical, to support housing? So far, I haven't seen it. But this is where I
Now,
want to go. Go ahead.
should that occur, the obvious policy would be to drop rates quite a bit to bring mortgage rates down to support the real estate market. Would that come into play as well? And that wouldn't be much a buffer this time if short rates, the Fed funds rates, drop to 2% or something like that, with what mortgages would then do.
Yeah, and that's what the Trump administration is counting on, is lower rates. And there are things that they're going to try to do to get rates lower. Obviously, appointing Mirren onto the board of the Fed is he's trying to stack the Fed with his policy people. He is, obviously tried to buy mortgages, MBSs, 200 billion of MBSs, to lower the spread between mortgages and treasuries, which helps lower the mortgage rate. And my guess is somewhere this year he will try and IPO the GSEs. Maybe later this year, early next year, I don't know. And that could raise money to eat into the deficit. So there are things that we know are out there. We just don't know the timing of them. But yes, lower rates is a huge. There are three things that I think could help housing. Lower rates, obviously, number one. Number two, increasing supply, and that's what I'm going to talk to in a bit. And the three is changing zoning and regulations around accelerating the approval process of building. And I think all three of those things are being worked on, and could be supportive of housing, at some point this year. But
Mm-hmm.
it's hard to see how that's going to have a big impact over the next 1 or 2 quarters. So right now, I'm still fairly negative on the home builders. Um, Let me talk to some data just to support my concerns about housing. The first chart, Jen, if you can put up, is housing starts, which were reported this morning. And housing starts came in at an annual rate of 1.48 million. This is a long-term chart, so you can get some historical perspective. 1.48 million starts is still sort of in recessionary levels if you look back at history. Um, so, from a long-term perspective, it's not a strong number, but from a very short-term perspective, it actually is an improving number. It's up 4% from the December starts. It was better than expected. I think expectations were 1.34 million. Now, this is for January. We had mortgage rates, I think, down around 6% in January, which would have encouraged starts. So, if housing starts continue to work their way back up to the 1.6 million, that would be encouraging, Robert. So, here's a stat that is starting to improve, and we'll see if it continues to improve. I wonder if starts, in February and March roll down again because we've had mortgage rates here, at least certainly here in March, move back up to 6.25.
Mm-hmm.
So anyway, the next slide is a number that was reported recently, and that's existing home sales. And you can see, they were around 4.09 million of existing home sales. That was a 1.7% increase. And, again, if you look at the last couple of years, it's not showing a lot of progress in terms of sales. So it's not stimulating home building products companies like First Builder Source or, Owens Corning or Mohawk. And you'd have to get, up to 6 million annual rate to really be in a robust housing sales market.
Mm-hmm.
But the start of this year has been better than people expected. So at the margin, maybe things are improving and home builders are getting more optimistic, and buyers are becoming more finding more availability of product, and therefore starting to creep back into the market. It is a buyer's market, no question about it. Last slide, and then I'll end my comments on housing there. This shows the existing home sales data in the white columns. The salmon colored columns are the new home sales data. We're lagging on getting that data because of the government shutdown. But we should get, some new home sales data next week, I think on the 19th of March. And, it'll be interesting to see what that shows. There was some, optimism that the home builders were starting to see improved sales, although